Now to the June jobs report. For the third year in a row, the economy is in a summer slump. Economists had expected about 95,000 new jobs, but Friday's report showed only 80,000 were added last month, the third straight month of weak job growth.
From April through June, the economy has produced an average of just 45,000 jobs a month. Earlier this year, it was 200,000 jobs a month on average. The unemployment rate now remains unchanged at 8.2%. Wall Street did not react that well to the numbers. The Dow fell 124 points, wiping out all the week's gains. And joining us now is Michael Santoli. He is senior editor for Barrons, the Dow Jones Business and Financial Weekly. Great to have you with us as always,
Morning.
Michael. So this is a topic everybody at this table has been talking about for some time now. And a lot of people are now looking at these numbers and saying, wow, 4 more years is how long, if we're going at this rate, 4 more years is the pace of recovery for the jobs market. Do you see it that way?
Not necessarily. At least it won't be exactly at this pace for 4 more years, but it definitely is a very long repair process. Once you've had one of these financial crises, you had a credit bust and a housing bust, it does take longer than after a typical recession to recover those jobs. A lot else going on right now. Obviously, you have private companies that have conditioned themselves for this very low growth environment. And this is the kind of job market you get when you're growing at 2% or less, which is what we're doing in the United States right now.
Rebecca and I were talking about this yesterday. I mean, you talk to employers and they basically say, things aren't great, but they're okay, but they're also used to now. They're used to this kind of environment. They know what they need. They're not going to hire beyond that until they get the business, right?
Well, and there's also so many other good excuses not to do hiring aggressively right now, whether it be what's going to happen in Europe if you're a big company that matters over there, the China potential hard landing in their economy. So, yes, we have a sort of a situation where companies are finding reasons not to go out and hire so much. I would point out, though, without all the public sector layoffs, public sector employment's down 2.5% since the recovery started, we would not have 8.2% unemployment. It would be much closer to about 7%. So the fact that states and municipalities are tightening their belts is exacerbating that private sector psychology.
Does it concern you then that this recent jobs report, the 84,000 private sector jobs that were created, was the lowest in 10 months?
It's definitely a concern that it has looked like a little more of a trend. So in other words, the 3 months have seen job growth stalled at something close to that level. Now, I would point out that, as you mentioned, you had 200,000 plus early in the year. There are definitely going to be statistical variations in a relatively short term, but it certainly seems the case that right now we're a bit at stall speed, I think, for the labor market.
This psychology kind of hung over us last summer and the summer before, and then all of a sudden we kind of popped out of it. And we saw, do you think that's going to happen again?
Potentially. I think if you get Europe stabilizing, and I don't like to kind of point to the whole uncertainty question. It's not just the election. It's about the federal government's finances and all the tax provisions and stimulus measures that are going to expire. It has to have some effect right now. Right. And the other thing, of course, to point out, in the last 2 years, you did get renewed aggressive efforts by the Federal Reserve to try to make money cheaper and more available. I don't think the numbers have been bad enough to really motivate the Fed to do anything more in that regard right now. But that's the thing that I think a lot of people are going to start looking toward if the labor market weakens from here.
Yeah, there's certainly a lot of calls for that, at least at this point. And
That's
they
right.
will probably get louder if things do get worse. Sure. Michael Santoli, thanks so much. Appreciate it.